One financial instrument that is used to secure trade as well as real estate transactions. And it's LCs as well as SBLCs. LC stands for letter of credit, and SBLC stands for standby letter of credit. And the purpose of an LC is a financial instrument used primarily in international trade transactions, but it's also in real estate transactions, and I'll explain. And it provides a guarantee from the issuing bank to the seller and the beneficiary that the payment will be made upon presentation of a specified document. So let me give you a quick example. So was working on a deal where it was a bunch of fruits and vegetables, and they were inside of the country, and the seller wanted to buy it, but the buyer wanted to buy these fruits and vegetables, but they didn't want to pay for it until the goods and services got to the port. Well, the seller of these goods were like, hey, we don't want to ship them all the way to the port unless we have some kind of guarantee that once we get it to the port that you actually pay for this, because you don't want to just send it there and they go bad and you can't sell them. All that money we'll just call it go down the drain. So an LC was used in that transaction because basically what happens is, so when the seller fulfills the agreed upon terms, so such as shipping the goods, what happens is they submit the required documents. Typically, it's a bill of lading or an invoice, and that goes to the bank saying, hey, here's the documents, as well as usually sometimes it'll be like an inspection document or whatever. The bank will then release the payment to the seller. So the bank will act as we'll call it a mitigator, a middleman. And what the LLC does, it minimizes the risk for both parties and ensures, because you know the person that's buying the goods doesn't want to pay in advance, you know, and give them the money, and then maybe the goods don't get there. So minimizer ensures that the buyer's payment is secured and the seller receives the payment upon the compliance within whatever those terms that are put together. Now, on a real estate transaction, so one of the local municipalities has this really great loan program where it will actually give out these really low interest rate loans, like 1-2%, for on real estate, renovations and so forth. But they will only put up the funds if a letter of credit is put in place. So kind of guarantee it, because if you have your tax dollars associated with lending money to businesses and individuals, you got to make sure that you guarantee to have those funds back. The so basically the municipality was asking for this letter of credit to guarantee that the payment. Now, one of the other things that is used, the financial instruments that is used, is the standby letter of credit. Well, it's different than the letter of credit, but the SBLC will act as a backup payment method. So what it does is it guarantee payments to the beneficiary, or sometimes to the seller, if the buyer fails to fulfill their obligations, or for example, like default on the payment. So like the LLC will make sure will be the kind of the linchpin to make sure that that payment is made. Well, the standby letter of credit is like more like an insurance policy that if it doesn't get paid. So the buyer, for example, if a buyer faces like a cash flow crisis or goes out of business, the SBLC will just ensure that the payment, the issuing from the issuing bank, and it's similar to like in construction, bonding, payment bonds and bonds like those kind of things. Now, unlike the LC, SBLC may have some specific clauses rather, that the buyer must fulfill before using this instrument in place. And while the LC facilitates a lot of times international trade by issuing payment, just in summary, upon those document compliances, that SVLC will serve as a safety net when obligations are not met. All right. Well, hey, if you have any questions, let us know or follow us for more cool information.